While being slightly fast-paced, as the market continues its session, Enphase Energy Incorporated, trading under the ticker ENP, is currently priced at $40.21, marking a significant intraday surge of over 4.67%. This is not the slow, hesitant movement of a stock finding its footing. This is an aggressive, decisive push upwards on considerable volume. For a stock that has been a portfolio wrecker for the better part of a year, this sudden burst of life is a stark contradiction to the prevailing narrative of doom and gloom that has enveloped the entire solar sector. The immediate question this price action forces us to ask is a critical one. Is this merely a fleeting moment of relief in a sustained downtrend, or is it the first tremor of a much larger, fundamental shift that the market is only just beginning to price in? The expectation for many has been more pain, more downside. The reality of today's ticker tape tells a potentially different story, a story that deserves a much closer look than the surface-level headlines would suggest. Let's establish the common ground, the shared experience of anyone who has followed the Enphase stock or the broader clean energy space. The past year has been nothing short of brutal. The prevailing belief, and for good reason, was that the solar industry was caught in a perfect storm. Persistently high interest rates have throttled the consumer appetite for large capital expenditures like solar installations, which are often financed. In California, a key market, the transition to NEM 3.0 drastically reduced the economic benefits for new solar owners, causing a chilling effect on demand. Simultaneously, European markets, which had been a bastion of strength, became bogged down by a massive inventory glut. Distributors were overstocked and sell-through rates plummeted. This macro and policy-driven hurricane sent the Enphase stock tumbling from its 52-week high of over $118, creating a sense of despair among retail and institutional holders alike. Many investors, whether using platforms like Fidelity with its robust Fidelity brokerage and Fidelity ETFs, or newer services like SoFi Invest, have watched this position in their portfolios turn deep red. The expectation became a painful cycle of negative earnings revisions, analyst downgrades, and a seemingly endless search for a bottom. However, today's rally demands that we challenge that expectation. This isn't just a random blip. When a stock moves with this kind of velocity, it forces us to dig deeper into the reality of the underlying currents. While the macro pressures haven't vanished overnight, there are subtle but crucial company-specific and sector-wide developments that are likely fueling this fire. Just recently, analysts at J.P. Morgan, while maintaining a neutral stance, nudged their price target on Enphase upward. While a small revision from $37 to $39 might seem insignificant, in the world of institutional investing, it's a signal. It suggests that from their perspective, the risk-reward balance is beginning to shift, and the relentless negative revision cycle may be drawing to a close. Furthermore, at the recent RE+ 2025 industry conference, Enphase wasn't just showcasing minor updates. It unveiled a suite of new products, most notably its bi-directional IQ EV Charger 2. This is a critical piece of the puzzle that the market may be underappreciating. The reality is that Enphase is aggressively executing a strategy to evolve from a solar component supplier into the central nervous system of the modern electrified home. This isn't just about microinverters anymore. It's about creating an integrated ecosystem where the solar on your roof, the battery in your garage, and the electric vehicle in your driveway all communicate and optimize energy usage seamlessly. This strategic pivot dramatically expands the company's total addressable market, a reality that stands in stark contradiction to the expectation of a company solely dependent on the struggling rooftop solar market. Discerning investors who use platforms with advanced research tools like Interactive Brokers with its comprehensive Interactive Brokers trading platform are likely starting to model out the long-term revenue implications of this ecosystem play. Diving into the daily trading dynamics, the volume accompanying this price spike is noteworthy. We are seeing a level of activity that suggests more than just retail speculation. This could be the footprint of institutional accumulation, or perhaps a short squeeze, where traders who bet against the Enphase stock are being forced to buy back shares to cover their positions, adding fuel to the rally. This is the raw, unfiltered reality of the market in motion. This isn't a theoretical discussion. It's capital being deployed, and it's happening with conviction. Whether you're a self-investing enthusiast using the Robinhood app for its simplicity and Robinhood stop trading, or a seasoned pro managing a complex individual brokerage account, this is the kind of price action that signals a potential change in character for a stock. The expectation was tax loss harvesting and further capitulation into year-end. The reality is a powerful counter-trend rally that is forcing a re-evaluation of the entire thesis. For those newer to the name, the fundamental business of Enphase Energy is built on a key technological innovation, the microinverter. Unlike traditional string inverters that manage an entire array of solar panels, Enphase's microinverters are installed on each individual panel. This architecture makes a solar system more efficient, reliable, and safer, as the failure of one panel doesn't compromise the entire system's output. This technological superiority allowed them to capture a dominant market share. They then intelligently expanded into energy storage with their IQ battery systems, allowing homeowners to store the excess solar energy they produce. The recent push into EV charging is the next and perhaps most transformative step. This core business model is strong, innovative, and holds a defensible moat. The problem, as reflected in their recent financial reports, is that even the best technology is susceptible to macroeconomic cycles. Recent quarters have shown significant year-over-year revenue declines and margin compression, the hard data that has supported the bearish expectation. Yet, even within those challenging reports, the management team has spoken of reaching a bottom in inventory levels and seeing the early signs of demand stabilization in certain regions, a subtle reality that the market may have initially dismissed. This brings us to the future outlook, where the tension between expectation and reality becomes the primary driver of investment returns. The bull case, the scenario where reality far exceeds current expectations, is compelling. If the European channel inventory clears out by early next year, and if the Federal Reserve signals a pivot towards lower interest rates in 2026, the operating leverage for Enphase could be astronomical. A resurgence in demand would meet a leaner, more efficient company, leading to a rapid acceleration in earnings. The successful rollout of their home energy ecosystem, with strong uptake of their new bidirectional EV chargers, would add a powerful new growth vector that isn't fully priced into the Enphase stock today. Platforms that offer automated investing solutions like Schwab Intelligent Portfolios are built on long-term themes, and the electrification of everything is one of the most powerful themes of our time. This is the reality the bulls are envisioning. Comment below how many shares of Enphase Energy you currently hold and if you're adding on this move. Conversely, the bear case cannot be ignored. The risk is that reality falls short of this optimistic scenario. The macro environment could remain challenging for longer than anticipated. Competition, particularly from SolarEdge and a host of international players, could intensify, leading to further price wars and margin erosion. The adoption of the full home energy ecosystem might be slower than the company hopes, as it requires significant consumer education and investment. If demand remains sluggish, today's rally could prove to be a false dawn, a classic bear market rally that ultimately fizzles out. This is the difficult calculus that every investor must weigh when considering investment help or making decisions for their self-investing journey across various investing sites. The key is to analyze the data as it comes in, separating the signal from the noise. In summary, the story of Enphase Energy is a masterclass in the battle between market expectation and underlying reality. The deeply entrenched expectation, born from a year of brutal price declines and negative headlines, is that of a struggling solar company facing insurmountable headwinds. The emerging reality, evidenced by today's powerful intraday rally, strategic product innovations, and subtle shifts in analyst sentiment, is that of a resilient technology leader on the cusp of a potential turnaround. The market had priced Enphase for a prolonged downturn, but the seeds of a new growth cycle are being sown. The disconnect between the gloomy perception and the innovative reality is where opportunity often lies. While risks certainly remain, the powerful move we are witnessing today is a clear signal that the narrative is shifting, forcing every market participant to question their assumptions and look beyond the obvious to understand what is really driving the Enphase stock.